Welcome back, ghouls and goblins. Or have you changed back? Well, I hope you had a happy and safe Halloween. Thank you for taking the time to join me today to talk about GameStop for our Sunday Fun Day review. I don't really have anything planned. This is going to be kind of just like a free flow. We were down to close the week last Friday, 1.3%, which is pretty brutal, retracing literally all the way to our lower trend line, which is very, very aggressive. Now, supposedly, the Dr. Beckett has got, some ETF refillment taking place in the coming week here from the 5th to the 11th. I remain incredibly skeptical on not only this, but, the Newton spreadsheet at large. I understand, the fascination with it by all means, but it would appear to me, at least so far, and now I'm very open and actually hoping that I'm wrong about this because it would be at that point an additional tool in my arsenal that I could learn and use. But um, it would appear to me that it would be potentially, of course, a tool that's being used to drive liquidity, right? That being said, I could be wrong on that, but it's just a way of things, right? Like, we have MSNBC and all these different, financial networks, Bloomberg even, like, their job is literally to drive liquidity. For every buyer, you need a seller, right? So, you go on the big news network where all the engagement is, and you say, you know what, I'm buying this stock or X stock at whatever, right? And you may do that in a small portion, but the other side of that trade is going to be a lot of selling, right? So you're rallying up buyers, and then you just sell to those buyers, right? And now this is through and through how it runs from the top down, even the FinTwits, right? Like the Twitter experts, right, where they're doing call outs for the different stocks. You buy in first, and then you do your call out, and then you sell into those, and that's exactly what these other people have been investigated for. Andrew Left comes to mind, right? Most recently at a larger scale, right? Furthermore, you've got all these private discords kind of doing that same thing. So a lot of new traders don't realize this, and then a lot of more advanced traders can't escape it, right? Because it is everywhere and everything. So just something that's I'm aware of. Like, I've been around for a long time. Um, and we've seen, multiple trading groups open up and, be relatively successful and then be exposed and shut down, and individuals themselves, right? So, something that I'm always aware of in the back of my mind because I've seen it so many times. And now we have the spreadsheet and we have this sensational buy come forward. And, the stock hasn't really done all that. Not to mention the calls have been absolutely obliterated. They did get some volume. However, those were tweet based. Ryan put a tweet out, and then the White House put a tweet out. That's social media buzz. You can't control that. That's totally random. No one could have predicted that based on failure to deliver or cat errors, etc. I do like the cat errors a little bit more though, and I think that kind of deserves some cadence. And not that this doesn't either. I'm just a paranoid individual who's been around a lot and seen some shady shit, right? And survived it, mind you, right? That's why I'm able to maybe forward this to you all. Is we see a lot, and this was kind of the red flag, right? So there are so many 25s here being sold, 42,000 of them, and they're out of the money. They're short dated, and it's one thing to place your bet, but then to not scale out seems really aggressive to me, because there was a miracle option presented to the longs on a couple tweets, right, where they could have potentially got out green. But then to not take those and to still hold out, it's very, very suspect to me. why someone's not trading accordingly, specifically when they had a trade plan. Okay. Now, I don't want to hate on this individual at all. By no means this is not what it's meant to be, but I wanted to voice my concerns, right? I wanted to be honest and forefront to, my thought process to the last week and to this week as well, as I watched this unfold in real time, right? We had this individual approach us and offer to educate us on all of this, which I truly appreciate. Don't get me wrong. I know I'm a bit of a dick here, but I do appreciate that. Thank you. And if it does work out, I'm going to eat my foot live on stream, apologize, and then ask for guidance. It's as simple as that. That's all you can do. And but in the moment, I do want to say that I'm finding this a little bit suspect as we have such high volume on these. And, now what we get is, just the market mechanics of a call wall. There are so many of these that we're never going to pass it unless we get, a significant catalyst, which, again, foot in mouth might be the case here as we move into the future and some potential swap dates. As I've been told, I really don't follow those yet. I'm very much a technical analyst, and we've been bearish on this literally all week. I said you're not going to like it, but this is what it is, and that's what happens when you get an exacerbative move here. Is it's definitely going to pull back, and it went so high that how could it not pull back, right? Unfortunately, we pulled back so hard. We're bottom trend line, so as suspect as I find this whole situation, it can be remedied really, really easy in the future. If someone's saying, I bought a bunch of these calls, that's cool. It doesn't mean you need to buy those calls, right? Specifically if they're out of the money and short dated, right? If you've been following the channel around a little bit, and we're going to talk about this as well, longer dated in the money or same date in the money, it's going to make a big difference in protecting your capital based on how, they degrade. Like this contract, the individual is paying 60 cents for, now is only worth 35 cents, 38 here. And is going to be far less come Monday when that theta, that 2-day theta clicks off of it as well. Now we're gone from 38 on 2.4 thetas. Now we're at 0.3. Now you're down 50% on the contract. But if you sold that contract, you're up 50%, right? So there is always another side of the trade to be aware of. And then if we see how quick this degrades into a negative trade, even if you trade sideways as an out-of-the-money call in comparison to an in-the-money call, and you see how if you trade sideways here, you're not going to minus 70%, right here, minus 61% on November 7th afternoon, right? Brutal, at the money, just trading sideways. Here, you're only negative 21%, right? And if we go to 24.5, then you're up 93 with being roasted at negative 61. Here you're up 135, right? So protecting yourself and even a little bit of extra top end there, which shouldn't necessarily be, but I think it's just because of how aggressively those other contracts got hit. So furthermore, add time, play past the next earnings, and only hold it for 30% of its life. Like if you buy an options contract for 30 days, hold it for 10 days before you sell it. Don't hold it for those last percentage days, because the theta curve really clicks up and will murder you. Furthermore, an advanced trader who's not selling covered calls and just looking for you to hold them into theta for their gain is probably going to recommend you don't hold them over the weekend. Lots of option traders will close their positions Friday afternoon, reopen them Monday morning, dodge the 2-day theta drop. So I don't know. There's a lot to learn on options. So I know a lot of people are really interested in that. We have obviously some education on that forefront coming out for you guys bit by bit. And then on that note, so they're selling these 25s, and I say, well, I'd rather sell the 25s, or they're saying buy these 25s. I'm saying I'd rather sell the 25s, and then I'd rather buy the 22s, right? So why not add those two together, and then we've got a bull call spread here, right, where we're buying 22s, we're selling 25s, right? We sell the 25 for the credit, we buy the 22, and then it's not going to cost us as much for that play. which is really nice. And then if we still remain channel locked, we're just winning, right? As long as we don't break 25 for that sell, it's good. And even if we did, that's fine because we still have our 22 call, right? We're hedged appropriately, which is really nice. So there are smarter plays to make as far as I'm concerned. Now, this person did admit to being a degen option gambler, which is exactly, to me, what this play smells of. And I am not looking to lose any money. I'm looking for consistent, high quality setups, that we're able to repeat time and time again, can teach you so you yourselves can repeat them as well, right? So, now with all that being said, this has been on my mind a lot, and I was maybe going to keep quiet about it because I could be wrong, right? But if I can protect anyone, I probably should have made this video a couple days ago when I was thinking about it lots. Um, Again, just my humble opinion. I'm wrong about a lot, and I'm sure I'll be wrong here. Now, there's more than one entity involved with this, obviously. I mean, there's 70,000 calls on chain that were sold. This is a very large individual or group of individuals operating here. And, we've been around long enough. We survived Jake Freeman, right? And that's not even that long ago. So it's interesting. We're going to wait and see how it plans out. And then, fool me once, shame on me, or shame on you, I guess. Fool me twice, what did George Bush say for that? I ain't get fooled no more. But that's how I feel. Like, we give them the benefit of the doubt. We, observe, see how it pans out, and then, we can make our decision accordingly after that. So again, just trying to get this off my chest. I'm not meaning to throw knives here at anyone because it could be organic, and I'm definitely in the wrong here as a paranoid individual, and that's just because I have so much experience in the market at large. I've been involved in a lot of different trading groups over the last 5-6 years here, so nothing new here, right? It is a sum zero game. Aside from that, the technicals, HGG, please get off of this. The $5 puts are still chilling on GME1. Those haven't moved. Obviously, those 25s are here. Now, on that note, remember when we were pinned down for so many quarterlies on OPEX from this last October, the 17th? And I said, okay, once those shed, we should see some movement. And what did we get? Those quarterlies shed, right? And then we finally got our movement after that. So I think once, we can watch the chain, obviously. And once these 25s shed in the next week or two, and I imagine they will remain there for the entire time, LOL, because why not take 100% gains on your cover call? Once those are gone, then I think, maybe we can move up again in the following weeks. But again, we're going to have to wait and see, what the chain looks like, if we can build an organic ramp or just this magical call wall appears again, which is super duper aggressive. So technical wise, really good risk reward. We did reject that 4-hour order block perfectly, literally to the cent the other day off that White House tweet, which is aggressive, and then right back to our lower trend line here. So just like it was really good risk reward here, so are we here. If you were to, be a FOMO sapien, you can't hold back from buying options. It's got to be in the money. You want to be buying the $22 calls. You want to be buying some time. We're talking January plus into next year, because we could trend on this line for a month. And if you're going to hold that call for a month, you don't want it to expire just over a month or in 2 months. You want it to expire 3 months plus, only holding it for 1/3 of its lifespan, so you don't really suffer that theta decay on the last half of it, as it does click up day by day quite aggressively. All right, so things are looking pretty bearish, but we are kind of at that area where we would see a bounce. So that's kind of what we're looking for here today. Nothing really for us. The other day we had a really nice entry model off of this breaker block that broke. We had entries here and a really nice scalp up, 2-to-1 risk reward on a couple option contracts there. But as of right now, not holding anything other than my comments. I don't like selling covered calls when IV is so low. Obviously, some people are a little bit better at that risk than I am personally. Um, and with such a big position, I mean, they're making 3 million plus on these covered calls here. So um, it's a lot easier to do it with that much of a position, or that many shares, right? Like I can't even sell that many covered calls personally. So it's always risk reward. And then, your average is going to come into that as well. Like I would never recommend someone sell a covered call below their average, right? Nor would I recommend that on bottom line. If you want to sell it on resistance, that's okay. A quick rule of thumb that I like to go by is 25% over max pain, because we are always kind of, gravitating towards it. And if you get, expansion over it by, 25% is like, how high are you going to go, right? At what point would you sell covered calls? So at that point, your intraday IV is up there, and, it could be worthwhile, especially again, if you're selling them above your average. I know a lot of people don't like to sell covered calls. That's fine. It's definitely something that you do incorporate into your strategy as a successful trader, though, even as a hedge, right? Um, so that's kind of what we have going on there. I want to do more education for the calls. Well, not just calls, options in general. For you guys moving forward, talk about intrinsic and extrinsic value. Let's also talk about kitty charts really quick. I don't think, because we're so bearish, I just don't think there's going to be anything to look at here. We're watching this on the 4 hour, and if this 4 hour can't hold and reverses back, well, then the 1 day is cooked as well, and that's just going to come down for an extended period of time. And it could be pretty bearish for GameStop, moving forward. I don't doubt that. And that's why they're selling these covered calls, right? Is because they see that. They know that they've got 31 days until earnings. So, they're not in danger of an IV earnings run up here whatsoever. Yeah, I mean, it just, in hindsight, it is all too obvious to me. But again, I could be wrong. Um, the technicals look pretty bearish. I hate to say it, but it is what it is. We are kind of in that area RSI wise for these bounces, right? But it could go lower, but just not much lower. So um, we'll have to wait and see how the week goes, and the so today, like this week will end on the 7th, and then next week I guess will be the 11th, the 14th. So 2 weeks to kind of see how these 25 calls resolve. Again, I don't have high hopes, but I've been wrong before, right? And would love to be wrong. On another note, we see HKD run. Now this is, a theorized swap for GameStop. It's got record volume, which is pretty aggressive, something that we cover on our day trading video. It's interesting, right? So these swaps are so hidden. It's hard to really understand exactly. Like they're so niche, right? I'm sure some people understand it, and that's another red flag is when an individual seems to have all the answers, right, and can provide you with them. Um, I don't know, just a little suspect. This is mostly just a suspect video. My apologies, bro. It's just my personality type. I don't mean this to be an attack whatsoever. You seem like a nice guy, but I just can't help but thinking it, and I feel obligated to share my thoughts on that. So again, so sorry, but I don't think you care, because if I'm right, you made a ton of money, and we look back again, and this person said they lost a bunch of money on the the warrants, right, when the options chain went liquid. But it appeared to me that we had a ton of volume sold on those as well. So did they really lose money, or did they make a lot of money? And are they also making a lot of money here? And that's why they don't care to scale out and protect their position like an appropriate trader would. That's just, again, I'm sorry. I can't help but share, right? So that is what it is. Um, y'all take care of yourselves, protect your neck, and it's okay to be suspect and to think these things. I'm not you know set in stone. Like I said, I could be wrong, and we're gonna just have to wait and see how it plays out moving forward. So let me know what an idiot I am in the comments below. You guys have a magical day, and I'll let you know when we see an entry model, right? Like, you want to go long in the money with time, sure, but there's no entry model here other than we're on our lower trend line, right? So, I personally will be waiting, but good time to load up in commons, maybe some leaps if you can't wait. Have a magical day. I hope you guys had a great Halloween, and I'll see you soon in the next.